Ladies and gentlemen, I welcome you all to the Q4 and FY25 post-earnings conference call of Menon Bearings Limited. Today on the call from the management team we have with us Mr. Arun Aradhya, Whole-time Director and CFO. To the right of Mr. Aradhya, we have Aditya Menon, a part of the promoter group. And to the left of Mr. Aradhya, we have Anshul Menon, again part of the promoter group. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to detail us about the business and performance highlights for the period ended 31st March 2025, the growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Hello, good afternoon, everybody. So we are meeting after first we have to salute to our armed forces, because of whom we can have a successful Operation Sindur. Let us salute them first. So now coming to the performance of our company, on a consolidated basis, total revenue recorded during the year is 244 crore as against rupees 214 crore last year, that is year-on-year increase of 14% growth. The PAT is 25.28 crores as against 24.35 crores last year, that is increase of around 10% plus, and that PBT is 34 crores, that is 14%. We estimate a growth of around 20% plus this year to reach almost rupees 300 crore turnover, followed by year-on-year growth of 19% for following 2 years, with PAT of average 13% for 3 years and EBITDA about 22%. So far as uncertainties in exports are concerned because of tariff declared by Trump, that is by USA, still we are unable to know exact impact of US tariff on our business. But it seems that we shall be able to pass on burden of duty fully to some customers and partially with some of them. But still we are not initiated, or customers also have not initiated any discussion regarding this. But according to the figures that we have got, what I feel that most of the customers will absorb the additional duty that will be levied by the USA by way of revised tariffs, etc. But still, nobody is sure exactly what will happen to the tariff and what will be the rates. That is still uncertain. Uncertainty is still prevailing, and nobody is able to comment upon that as of now. And in spite of increase in the business, it had no significant impact on profitability for the year as such. Because of input prices increase, there is a pre-decided formula with many of the customers depending upon 3 months average or 6 months average. Considering 6 months average of raw material prices, there was a very little impact on the average prices as compared to the last period. So we could not pass on fully the burden of raw material prices to the customers. So because of that, EBITDA had not changed much, and there was little impact on EBITDA as well as on the total profitability of the company. However, this impact can be passed on to the customers after considering the average of raw material prices during the current 6 years, and I am sure we should be able to pass on the burden according to the formula that we have already decided with them. Apart from that, what I feel that you must have gone through the details and results of the company as compared to the corresponding quarter of the last year. The total income increased by almost 20%, PBT by 15.47%, and PAT more than 17%. We continue to look forward to see that there will be good amount and significant increase in all total revenue, EBITDA, PBT and PAT as well. We are very sure, considering the development going on, samples approved, the production items to be productionized in a recent future. We are very hopeful about the performance of the company as a whole. Now, I request all my colleagues to go ahead with the questions if they are having any.
Sure, sir. All those who wish to ask a question may please use the option of raise hand. Alternatively, if you're not able to do the same, I request you to drop a message in the chat box and we'll invite you to ask the question. So the first question in the chat box is what is the segment-wise margin and segment-wise revenue potential for the company?
Segment-wise margins as such, if they are talking about EBITDA margins for the year 24-25, for the last year, EBITDA margins in bearing were 20% plus, then almost 21% in aluminum division, that is Alcop Limited, and in brakes, it was 3%.
I would request Rohit. Sorry, you're done, sir?
Potential as such, if you see, what we feel that this year we will be recording EBITDA margins of more about 65 crores with profit before tax of around 50 crores and net profit around 37 crores. This is what is the potential that we see. These are all estimated figures, and let us see, and fingers crossed.
So we'll take the question from Rohit Bhairwani. Rohit, you can go ahead.
Yeah, thank you for giving me the opportunity. The first question I have is I was looking at your investor presentation and that you have incurred a capex of around 20 CR in the bimetal division, but the capacity is same as last year. Can you explain why is that and how much expansion have we incurred in this bimetal division?
In bimetal division, what we have done that we have completed the infrastructure facility that is around 45,000 square feet of building that has been completed, and we are having there a lead-free plant. Lead-free material production is being done there, and along with that we have increased the capacity of washers now, that is by almost 7 lakh of pieces per month, and the capacity of total 5 crore 28 lakh of pieces per year is the present capacity now. And we have specifically increased this capacity in view of the orders that we have received from Allison USA. And Allison USA people are here for sample testing and everything, and that is almost over now. And maybe within a period of 1 month from now, we will get final results from USA, and thereafter maybe from August, what I feel that a business of around 2.5 crores per month will start thereafter. Only with USA, apart from other items under development.
Okay, okay. And what is the capacity utilization in the bimetal division after this capex? And how much potential is there in that segment to increase our revenue?
Considering the present context, you see, additional 7 lakh, let us keep that aside. Considering apart from the 7 lakh of pieces additional capacity per month we have created, the present utilization is 85% for this month. And I am very happy to let you know that during this month, bimetal division will be recording highest sales in the history of the company with highest ever profit for the month.
Okay, okay, that's great. That's great. Congratulations for that. And considering the capex in LCOP division, which is around 12.5 CR, how much capacity will be increased in LCOP division specifically?
I will let you know exactly the capacity as such of production capacity of metal that is already in place. what we have to do is to further increase the demand from the customers. We have to have another machine matching to the demand of the customers. So we'll be adding the machines and production capacity will remain as it is of metal.
Okay, okay.
And Mr. Aditya Menon wants to talk to you.
In aluminum division, we've done a new shed of 65,000 square feet, which is now operational. So we already invested into foundry machines, 900 tons and 580 tons for production, and we already invested in few VMC. So currently, we still have 30% capacity free,
Okay.
but as spare capacity. So as we get more orders, we just have to get the VMC machines just for final machining. So the main bulk of capex we have already done for bimetal division and aluminum division. So the main capex of getting the land, completing the building, getting all the permissions. So all the main critical part is done. Just the additional, whenever the orders are in place, the extra machines are required. That we have to do. So every year, roughly around 3 to 4 CR is required for that extra investment. But everything else is in place, which is already been done.
Okay, okay, sir. Got it. I'll join back in the queue. Thank you.
Thank you, Rohit. We'll take the next question from Kunal Tokas. Please go ahead.
Hello, am I audible?
Yes, Kunal.
Yes.
Okay. First question is you said that there is still some raw material cost increase that you have yet to pass on and that you will pass on in the upcoming year. So what would that amount be?
Amount it is not certain. We have to calculate the revised prices from the date when it will start. Maybe from 1st of October. The revised prices.
Okay, what do you expect the percentage to be? Sir?
I will tell you how it works. You know, the formula normally it equals out. So this last 6 months we have bear the cost. So next 6 months the companies will bear the cost. So normally over a period of 2 years the delta is equal. So this last 6 months we have bear the cost.
And so far as percentage is concerned, it will be about 10 to 12%.
10 to 12%.
Right.
But that also
Okay.
depends now on the war situation. The prices go up and down. But normally that is a delta which gets equalized. What is it? 3 months is high, 3 months is low. So you get at the right equilibrium price.
Yeah. As of now, what you believe is that it will be 10 to 12%.
Yes, sir.
If everything goes smoothly, we should benefit on that.
Okay. And second question is regarding the ongoing capex towards Alcohol division.
Yes.
So is it more of a bottlenecking operation or increasing the capacity?
No, it's just because we have a very strong order book, like how Mr. Aradhya has said, for the next couple of years. Seeing that in mind, we have gone for a increase in capex. So we have already invested, the majority of the capex is already done. So the machines are already installed and in operation. But like I told you, like if some parts come, they require some specialized machining. So that only few VMCs, according when the order comes, we have to add. But the main capex is already done. The whole building, transformer, electrification, the main, the heavy chunk of the capex has already been done and is in operation now. So the 65,000 square feet building is already operation now. So the first phase of machines have already shifted and the operations have begun.
All right. And what's the progress with railways in the brake segment?
For the brake segment, before we apply for railway, we have to get a dynamometer. It's a equipment that you have to have in-house for testing. So that is already ordered. That should be here by September. So maybe one more 6 to 8 months should be a time period till we start getting the brakes business. Because after we have a dynamometer, after they finish the audits, there's a testing period from 3 to 6 months, depending on the product. From the railway side, only after that gets done, we shall go ahead with the railway orders for the brakes division.
Okay.
Yes.
Okay, understood. Thank you very much.
Yeah. Thank you, Kunal.
Thank you, Kunal. We'll take the next question from Piyush Patel. Please go ahead.
Thank you for the opportunity. Sir, I have a couple of questions. Like in your bearing business, how do you see the competitive positioning changing? And are you seeing any competition growing in engine bearings business going forward? or how is the industry faring in context of current trade disruption due to duties and etc.?
See, I would like to add, like in the organized sector, there are four main players who supply to the OEMs. So Menon Bearings is one of the four players. So when 1993, when the company started, we had 0% market share. The other three organized players had the whole market. Today we have around 18% of the market, the organized market. Organized market, in what I mean is OEMs. So last 25 years we are keep on increasing our market share. So as such, we are not worried the competition. We are the competition for the three bigger players.
And as I told you that what we are estimated considering the items which are under development, which are already developed, considering that I hope to grow at a rate of 20%. Maybe in exports majority will come through exports only. So custom duty will have no significant impact on our turnover.
And my other question is, where do you see your margin sustaining in the bearings business? Like, what are the sustainable margins in LCOPs and brakes business, since it looks lower in those business versus bearings?
Margins, you are talking about EBITDA margins or PAT margins?
EBITDA margin.
EBITDA margins are more basically in Alcohol, that is comparatively more than bimetal division, or it is little more than what we are having in bimetal division. And since we are just started 1.5 years or 2 years back in brakes only, it will have the comparative EBITDA margins will be there only after 1 year from now, after getting the business of railways as well as with OEMs also. After introduction of dynamometer, we will be getting samples approved of both OEM as well as of railways, because of which our business will be at par with what we are doing in aluminum division as of now. And so only then it will become comparable.
Because brakes is a new product. So it's only been 2 years now. We're not even at full capacity there. So as we start utilizing capacity, there will be efficiency. We start getting better margins. So in the next couple of years, even Menon brakes should be at the similar levels of Menon bearings and Menon alcohol.
And sir, it's good to see that next generation now coming forward. Like, how are the roles defined?
You see, Mr. Aditya Menon is looking after brakes and aluminum division, and Mr. Anshul, he is looking after bearing now. Of course, both of them know about each other. Of all the companies, we are regularly meeting in Menon Bearing to discuss about the progress and estimates and development going on in all the three companies. And it is actually a cross-functional team that we can call. But basically, both of them are the basic focus of them will be Mr. Aditya Menon on Alcop and brakes, and Mr. Anshul on bearings.
And for you to get a better picture, we top management are common in all the factories.
All factories.
The bimetal division has a own GM and a whole team. Alcop has a own GM and a whole team. Brakes has a whole GM and a whole team.
But we are common to all.
We are common top management. Mr. Arade, Mr. Dikshit, me, Anshul, my dad. We all are common in all the business.
Okay, sir, great. Thank you.
Thank you, Piyush. We'll take the next question from Arnav Sahuja. Please go ahead.
Hi, thanks for taking my question. So basically, I just wanted to know, so we are planning to enter or
Mr.
basically
We can't hear you.
I think Arnav, there is some background noise from your side.
I'll put in the chat box.
Okay, Arnav. Meanwhile, we'll take the next question from Rohit Bahirwani. Please go ahead.
Yeah, thank you. I had one question on the brake side. I understand that you are exporting around 50% in the brakes division, which you did in FY25. So could you please tell us where we are exporting in the brakes division? Who is the customer? If you can share anything in that regard.
To give you a basic idea, we're doing merchant export. We are exporting to the Middle East. So we are exporting the Middle East, UAE, Oman, Qatar, and from there we are even exporting to Africa, West and East Africa. So we don't want to do direct business in Africa because of risk involved, payment collections and etc. So through parties in Middle East, we are targeting African markets also, where there's high potential for brake pads and disc brakes.
Okay, and any talks with any other OEM, whether in India or in the abroad for brakes division? Do we have any types?
Yeah, we are in talks with couple of 3-4 OEMs to be. I don't want to take names till it clicks, but there are 3-4 OEMs in pipeline. And like Mr. Arad and I mentioned, we've invested in a dynamometer, which is a very expensive machine required for testing. So as soon
Okay.
as that comes, and it take make sure all the processes go faster. And if even one OEM clicks, we'll have to invest, and our capacity will be. We'll have to invest one more line because we'll be in full capacity. So
Got it.
this year, OEM, we shall be giving you good news by end of this year for
Got it.
regarding brakes division also.
Got it. Got it. And one final question on the EV segment. I understand that you are working on a component in the EV segment. So what exactly is that component and whether trials are completed? We are in commercial production. At what stage are we in the EV side?
Actually, for EV, from Menon Alcoff side, we are supplying to EV. So for the last 4 years, we're supplying to Tesla Motors through concentric pumps. So we are a tier 3 supplier. Like concentric pumps is a big company. So we do the manufacturing for them, and they've got a contract from Tesla. So that's one part. Another part from Eaton Transmission, Porsche e-mobility. So we have developed 4 parts for Porsche e-mobility, which are already samples are submitted, and the production should start from next month. So the last 3 years we're working with Porsche e-mobility, and now in the Indian market with Tata Motors for their Tata Curve, we are working with Taco Prestolite. It's a sister concern of Tata Motors. So we have developed 2 EV parts for them also for the electric batteries. And for the last 1.5 years, as a company, as Menon Alcock, we are trying to shift towards little bit, not everything. We're trying to shift towards EV because EV has the latest technology. So that keeps us as a company also at the what the latest technology in the aluminium casting is. So we are exploring that, and we are successfully making samples because EV, the walls have to be thinner. It's higher technology working with Porsche and Tata. So we are developing we are entering into EV also. I would like to say. Yeah, thank you.
Okay. Okay. Thank you.
Thank you, Rohit. We'll take the next question from Bharat Gupta. Please go ahead.
Hi, I hope I'm audible.
Yes.
Yes, Bharat.
Yeah, a couple of questions from my side. So, can you just help me quantify the order book position which we have at present and what kind of RFQs we are expecting across both the segments, Alcop and Bimetal during FY26?
Okay. So as of now, if you take this month, the total order book position is 23 crores put together on contracted basis, and 45 crores of business is in pipeline so far as bimetal bearing division is concerned, and in aluminium division we are having a pipeline of 60 crores.
Where we
60 plus.
actually already got the RFQ and POs. So this will take around this year and next year to monetize it. So actually in our business, how it is, from once you get the RFQ, then we see the feasibility, then we fix the prices. Then it takes us 3 to 4 months to make the dies. Then we make the first sample. There's the first batch of 300, 400 which we make, which have high precision testing at our end and at customer end. So the whole process from start to end takes around 9 to 10 months. So we have a strong order book in present. So total bimetal and Alcop, I would say we have around 90 crores already confirmed orders. So which we will be executing in the next 2 years, in the next 2 financial years. And at the same time, what RFQs we get now, that will get converted in a little bit more time. So this is confirmed order book, which Mr. Aradhe told you right now.
Right. My piece of understanding pertains to the fact that we are aiming for 20% kind of a CAGR growth for next 3 years. So, like incrementally, we are adding capacity. So, the kind of order book position which we should have, ideally, it aligns with that, or somehow it depends on the incremental amount of RFQs we'll be getting across newer segments, EV, defense, railways. What's your take on it?
So we are not depending upon the other components which we have already received the RFQs, which have been samples have been submitted, which have been already tested, validated, and which will be productionized. As Mr. Aditya told you that it will be productionized in this year and next year. Within 2 years, all this will be completed so that we can achieve year-on-year growth of 20% easily.
And for just better understanding, these are not some new EV customers or something. These are already our current suppliers. We are just doing more for them in the export category. Because like we mentioned before, global manufacturing or people in India who are preferred suppliers are benefiting from this because all these big MNCs want China plus one plus Europe plus one supplier. Thus, we are seeing this growth.
So that growth is mostly coming from exports.
And in terms of our cost competitiveness, how we rate across the other three suppliers? Because you mentioned in bimetals there are 4 players. So in terms of cost, how are we placed?
You see, so far as building biometric division is concerned, we are single source to John Deere for more than 25 years from now. We are single source to them. So far as international tractors is concerned, we are 80%. We are having SOB of 80%. In Tata Motors, we are having SOB of 60%. So in TAFE, we are having SOB of 85%. So they must be considering the prices as well as as compared to the competitors. Our prices are little lesser, but if you see the results of all these companies who are our competitors like Bimetal, Federal Mughal and KSPG, our profitability and EBITDA margins are far more better than they.
Sure, sir.
And
Sir, just
I would
also,
like to give you one more side to this. In our industry, it's not only price sensitive. Here we have to have strict quality checking because all products are extremely technologically sensitive. Even if one bearing fails, the whole engine seizes. So quality is a big factor for customers while choosing a supplier, and also timely delivery. So all our customers are MNC and there are high strict quality and time delivery factors which we are graded on. So price is one factor, but all the other technology readiness, all the other things also play a key factor for a customer while choosing a supplier.
And we are getting zero PPM certificate from many of these customers.
So
Zero PPM means zero rejection per part million.
Part per in millions. So in million parts, there will be zero rejected parts. So that kind of quality and precision we are working with here.
right. Just a question, sir, in regard to the exports only because of the tariffs. So have we seen any kind of a deferment by the customers in placing the orders or in giving us the RFQs? Or we are seeing the demand to be in traction and customer support is always with us?
See, I just for a basic understanding, I'll just tell you. Like now, we give a part for John Deere, for example. See, my bearing is hardly 35 rupees or 100 rupees. That tractor is for lakhs. So these big MNCs bear the main duty or duty tariffs. So they normally absorb it. They don't pass it down to smaller players like me. And if they pass it down, also it's shared or it's we as a supplier we never get the whole brunt of it. The big players who will sell the whole tractor, they fees for them the duty is the what you say
final product.
Final product. So till it gets passed down to us, it will take time. Till now, we haven't seen from any customer. We do 35% of our total business export. We haven't seen any duty increase or any pressure from our customers yet.
Right. Just a confirmation, like in terms of your opening remarks, you highlighted on EBITDA of 65 odd crores and PAT of 37 crores. That guidance remains for FY26?
It is for 26, right?
Yes.
Right. And just a final, sir, update, like if you can share across the Brakes India segment, like we were working in getting a tie-up with them for, I think, brake segment. Any update you can share with them?
You see, just now Mr. Aditya told you that after the receipt of dynamometer, it will be applicable for both railways as well as for this Brakes India as well. So simultaneously, we will get into business of both railways as well as OEMs, and that probably will be at the end. That this good news will be by the end of this year.
Like just to get a better explanation, a dynamometer comes from anywhere from 4 crore to 10 crore. And currently for Brake India, they have multiple dynamometers. So when we give a product, they have to have free testing beds because see, they already have existing customers, because we are a supplier of bearing and bushes to Brakes India. They have, what do you say? Because of a good relation for the last 25 years, they have accepted us. Or what do you say? So we have to do according to that bed timing, their testing. And this all testing takes 3 months, 4 months because it's critical in a safety product. Because braking goes in a safety product, there's more stricter testing going on with that. So as we have invested in a dynamometer ourselves, so this process will get faster and we shall give you good news soon.
Right. That's it from my side, sir. Thank you.
Thank you.
Thank you, Bharat. Sir, we'll take a question from chat from Arnav Sahuja, who asks, we are planning to enter the EV segment for Alcop's supply of components to Porsche, but Porsche has announced that at a global level, it is reducing its focus on the EV business. Is this likely to impact us in any way?
See, when I say I'm developing parts of Porsche, I'm not developing 100 parts. I'm doing 4 parts for them. And whatever quantity they have given us is, what do you say? It's a part which can go in EV segment also. It can go in a EC engine also. So it's a good business. 4 parts. I don't know if I'm allowed to tell how much only 4 parts business is. It's a good amount, I would say. And yeah, so it's a positive business for us. And for us, what one more important thing is working with Porsche and Eaton. It pushes our technological limits. We are working with thinner fins, thinner wall sizes, more efficiency, more technology. So as a company, we are more capable to adapt to more. What do you say? More we get accustomed to make more difficult parts or more value addition as such.
Apart from that, whatever orders that we are receiving from our major customer John Deere now, which are to the tune of more than 55 crores. So as compared to John Deere, this Porsche segment is comparatively not significant, you can say. It will not have any impact on the total revenue, whatever we have estimated so far.
Thank you, sir. We'll take the next question from Ashwin Taparia. Please go ahead.
Thank you for the opportunity. Good afternoon, sir. I hope I'm audible.
Yeah.
Yes.
All right. Thank you. So a couple of questions. Firstly, sir, Arun sir stated that initially he laid down remarks about the vision for the next 3 years. I just want to understand because currently the promoter holding is at approximately 64.8%. So for the next vision, are there any plans going forward to dilute the stakes, and how are we shaping up for the next few years?
You see, if you are able to give me the pricing of 175 per share, we are ready to dilute to some extent. Are you ready?
All right, I got it. All right, sir, and just
Nothing like concrete, like we want to dilute or anything. It's just last 25 years, family has put so much effort. It's just wealth creation. If there's good value. If it's not, company is doing well. There's no hurry or rush.
Now, we are not into rush anything like that. But whenever there is a possible, we can unlock the value, but not to a major extent. We will not go. Maybe it can be to the tune of 2%, 3%, 4%, and that's all. And we are not going any time in the future. We will not be having a stake less than 60%.
got it. And so just to follow up on this, so since we are seeing that we are exploring opportunity for export market. Export is doing well. We have also seen news coming around European market that uh, the manufacturing plant of one of the company, Japanese maker, they have stated that jobs would be cut down. So just wanted to understand your perspective since you are supplying to Porsche through Eaton. So how's it shaping the European market overall? Are we seeing any demand trends over there? And how is it going to shape in future for us in terms of export?
See, I would like to explain. See, now India also has gone through a war now. But before this escalation happened, all MNCs have shifted the global sourcing to India because they want a China plus one solution for sure. And after Russia and Ukraine war also, energy prices in Europe increased tremendously. So they couldn't sustain it for a long time. So even European companies are shifting towards India, or we are seeing a bigger number of RFQs coming now. 5 6 years ago, I remember Mr. Arade, me, I had just joined business. We used to go to Europe, US, going to door, giving a company presentation, what our strengths are. But today the situation has come like they are sending RFQs.
They are approaching.
They are approaching us. Like once if the rate is final, they want to come start manufacturing in India. But this is only for companies who are doing well, who focus on quality and that not only Menon bearings, but other companies also who have good quality, good financial strength. They should also be they'll also be having the same scenario where they are getting RFQs from abroad, from Europe and USA.
Got it. All right, and sir, just one or two more questions. You stated about this dynamometer. It will be bought by September, I guess. So just wanted to understand, has the approval started? Have we got approval from RDSO, the railway department, or
We have already done our initial registration and everything.
We have already done registration and it is pending final
Final order.
certification is pending for want of dynamometer.
and what would be the incremental revenue we will achieve through this?
Incremental revenue will be around 2.5 crores per year, per month.
Got it. Got it. All right. So, and just wanted to understand how much cash are we sitting on in the balance sheet?
It is almost, I think, 21 crores.
Got it. Thank you. All right. And so, last question from my end. So just wanted to understand, since you brought down the vision for the next 3 years, so we are still concentrated in Maharashtra itself and that too in Kolhapur. So just wanted to understand if we are bringing to north or maybe down south, are we going throughout the country, or maybe how are we shaping up?
No, we have no plans to expand beyond Kolhapur because you see, there are certain benefits if you are having all your infrastructure under one roof. Like we are having 3 plants in Kolhapur, so far as bimetal bearing is concerned, all these plants are within a
100-meter radius.
100 meter radius.
And Menon Alcop also is 10 minutes away. So that is why what you see, we are cost competitive, we are more efficient. That is why our margins are better than our competitors. Our top line is not very heavy. We all share responsibilities. So that's what you say. That's our USP as a company.
And we can have a better exercise, better control. That's why you can see that the results and our EBITDA margins and the PAT margins are comparatively better in auto industry as such.
Got it. Thank you, sir. I'll join back in queue for a few other questions.
Thank you, Ashwin. We'll take the next question from Harshil Solanki. Please go ahead.
Hi team, good afternoon. So I had one question on the EV charger side of the business. We had planned to get into this segment. So have we progressed on those lines? If you can throw some light on this.
Still there is no progress. Still there is no progress. Our inquiries in USA are going on. Still we have not got a specific and suitable manufacturer who can have a tie-up with us so far as manufacturing of EV chargers are concerned. Only after we are fully satisfied with the other side, we will not go ahead.
And Harshil, I'd like to add, it's not only about EV charging. EV charging one of the prospects we're looking at. We're still looking at similar products where we can share the same number of EBITDA, same number of profit margins. So we have 2, 3 options in our head which we are studying on. So as soon as we lock on to something, all of you all will come to know.
Yeah.
But it's just a new, just keeping us open-minded as both of us have joined.
There are certain products we are concentrating upon that and developing. So inside story we cannot tell at this moment of time because it's a business secret.
Yes.
As soon as we get to know exactly what is the market, what is the potential, and considering all that, we will go ahead and develop that item over a period of time, which may take another couple of years also.
Okay. And
The main reason behind it was we don't want to miss any opportunity. We want to be ready if there is any opportunity in the market.
got it. And this would be under your Menon New Ventures subsidiary, right?
Yes, yes.
Okay. Got it. This was it. Thank you for answering.
Thank you, Harshil. We'll take the follow-up question from Rohit Bhairwani. Please go ahead.
Yeah, thanks again. Could you please explain us what kind of income is getting accrued in the operating income and why it is not clubbed under revenues? It is around 3 crore, I guess, for the whole year.
It has to be actually, it should have been clubbed into the regular sales, but it has been shown as other income right from the beginning. So we are not changed.
Could you share what kind of income is that?
It is majority that comes from sale of scrap.
Sale of scrap. Okay, got it, got it. Thank you. That's it.
Thank you, Rohit. Anybody who wishes to ask a question, please use the option of raise hand. We'll take the follow-up question from Piyush Patel. Please go ahead.
Uh, Sir, I have a follow-up question. Like you're working as a critical supplier to several large companies and products. Also, you are doing work where there are not many people, and hence your business is not like a commoditized product. But somehow the same does not show up in your growth. When do you see recovering in a consistent manner and on sustainable basis? And what will lead to this revival in stronger growth rates and versus what we have seen in last 2 years?
You see, there are certain other customers in aluminum pigment also. There are so many other competitors and we have seen that in spite of having a turnover of 500 crores or 1000 crores also, the margins are just 3%, 4% fat margin. We don't want to grow like that. We are satisfied with what we are doing with EBITDA margins of more than 20% and fat margins of more than 10%, and we are satisfied with that. Instead of doing a business of 500 crores and making a profit of 25 crores, let us do a business of 250 crores and make similar profit. That is good.
Just for Piyush, for you to understand, I would like to explain in easier words. Today we have around 1,000 employees and we are doing so much profit. If I have to do, if I'm growing, all the headache increases.
5,000.
So I have a friend in Kolhapur whose turnover is 1,000 crore, but he makes profit as much as me. His electric bill is 5 times mine. He has three times the labor of mine. Loan must be even higher. So all headaches, stress, how he sleeps at night is different. So it depends how you want to run your company.
Apart from that, what I wish to tell you that so many political parties
Sorry, sir. Hello.
I think there's a drop in the line on the company's end. We'll just hold on for a minute. Yes, sir. Please go ahead.
Okay. There are certain people who are going on telling that there is tremendous unemployment. But what we see that there is a dearth of skilled workers, maybe at Kolhapur as well. Maybe in Kolhapur only also. I don't know. But there is no issue of unemployment as such. At the same time, we are facing a shortage of employees. This is the situation.
Okay, sir. And sir, I wanted to understand your view on revenue growth. Where do you see it sustaining and where do you see yourself in 3 to 5 years? Or in other words, by when do you expect to hit 500 crore revenue?
You see, you can calculate if we are growing at a rate of 20%, you can calculate by which time we will be able to reach almost 500 crores, maybe within 3 years from now.
Okay, sir. Great. Thank you.
Yeah, thank you.
So I
Thank you,
think
sir.
that was the last question. We have a question from Ashwin Taparia again. You can go ahead.
Thank you again. I hope I'm audible again.
Yes,
Yes.
yes.
All right. So just one or two more questions. I just wanted to understand, you stated about TACO. So there was an ongoing auto inspection. Has the inspection completed? Have we onboarded them as a customer? Can you confirm it?
We have onboarded them as customers. We are even giving the first kind of what do you say samples to them, but we haven't heard about any inquiry as such.
Okay. So it's as in it's not reflecting in the revenue. Not yet. The production has started, I guess,
No,
right?
no,
No,
yet.
not
But this financial year you'll see it. Taco Pressolight, we developed 2 or 3 components for them for their electric vehicles. Yeah.
Okay. And what about Bajaj Auto?
Bajaj Auto, finally, there are certain changes in their model. So because of that, few more samples have been submitted to them, and probably that will be completed within a period of couple of months from now, and that start of production will be there thereafter.
Okay. Okay. So even for this, the production is yet to start, right?
Yeah.
Okay. And so just wanted to understand the land that we have. I think it was 15 acre, if I'm not wrong. 9 acre has been utilized. So
That's
the
in the
rest of
Menon Alcop division.
right.
We have
For
around
alcohol.
14 acres, where 15 acres, where 9 acres has been utilized now. We still have 6 acres for future development. So we can have even around 4 to 5, 65,000 square feet sheds there. So we have a lot of land for expansion, which we have already invested in the past and kept. That's a very positive sign from the company's end.
Okay. So and I just wanted to understand since uh, all the three divisions of the product, alcohol, bimetal, and brake, how are we shaping up as in the market share that we have? Because I understand maybe previously you have mentioned that brake segment we have a heavy competition, even in other segment, but brake we have heavy competition because you have recently ventured into this platform.
You see, biometal as such, we are having a share of 18, which may go up to 20% domestically. So far as brake line is concerned, as you also know that there is a good amount of competition into that. We cannot quantify at this moment of time. Similarly, in aluminium, there is a
I would
huge.
tell aluminium sky is the limit. We are only doing 80 crore, 68 crore turnover. Taco Prestolite alone buys around 3,000 crore of aluminium castings. So aluminium, there is what do you say application in all fields, not only engine. So now currently in Alcoa we are doing airport lightings, we are doing oil and pipe,
Gas light.
oil and gas applications. We are doing water pumps. We are doing engine parts. We are doing two-wheeler shock absorbers. So aluminium, their application is unlimited. So aluminium industry must be huge. So there is no market share as such. There are few aluminium companies which turnover is 3,000, 4,000 crore. So aluminium industry, the size
Is a next
is
generation
an
metal.
ocean. So you can't say that. In that we are highest value addition. Like you said, why aren't you growing at a higher rate? If you see my competition in aluminium, all big companies, the realization rate. So this is for basic understanding. Aluminium in the market average price is 200 rupees, and our selling price after doing all different value addition is 750. So our competitor is 500, 550, roughly. So that's why our margins are better. We are trying to focus on more value addition and more technology products. So as a company, we also are at the highest level of technology, and we are not replaceable easily. If I do any average part, then tomorrow competitor tell me give me price reduction and change me with someone else.
When you come to see the factory and our facilities, many of you must have already visited our factories, and you will come to know how critical parts we have developed in aluminium division. and then only you will come to know as to why there is a better value addition. And now I hope this is the last question, and hence I request all of you to come again and see the factories. You are kindly requested anytime to come here and visit. We will be delighted to receive you, and you can see the hospitality that we offer to you. So kindly come. Thank you.
Thank you, sir. And thank you to all the participants for joining on the call. And thank you to the management team again. This brings us to the end of the today's conference. You may also disconnect now. Thank you.
Okay, thank you.
Thank you.